UiPath is an interesting stock at the crossroads of automation and artificial intelligence. And a lot of investors have been watching this stock, seeing its underperformance over the previous year and 2 year periods, and the founder coming in and stepping in and all the leadership change at the top. And they're curious about this business, what's going on, what's a fair value for this stock, and is it a buy at the current market price? So I'll elaborate on a lot of that here in this video. I'll share with you my fair value calculation for the stock, which I just updated this morning with new information based on the changes in interest rates and how that impacts this business specifically. So I'll share all that with you here in this short video. So let's get right into it after a brief message from my sponsor.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So in its most recent quarterly update to Wall Street analysts and investors, Daniel Dines, who is the CEO and founder of the company, who recently stepped back in as CEO, said that automation and AI are stronger together. Their deterministic foundation, enterprise-grade RPA and API automation capabilities deliver the trust, scale, and reliability mission-critical processes demand. On top of that, their leading AI capabilities, document processing, and all of their offerings that can reason, plan, and act bring the adaptability, intelligence, and speed. And what brings it all together is the orchestration that UiPath provides. And now zooming out a little bit, not looking at UiPath specifically and looking at just enterprise processes, there is significant growth in the number of tasks that enterprises need to complete in their everyday operations. As businesses grow larger, the need for repetitive tasks increases, and UiPath serves those needs effectively. You can automate processes that are repetitive. It can save you time. It can also make jobs more exciting for your people. You don't have to give people jobs that are so repetitive all the time if it can be done by a process automation platform like UiPath, and then your team can focus on higher value tasks using more of their imagination and creativity to add value to your business. And so this is highly in demand, especially as wages are increasing. And so the time your people are spending on these types of activities is costing you more because you're paying people higher wages. So the growth in this industry, no doubt, will increase. However, the big question for UiPath has been, how much will UiPath be able to capture, and how much of it will go towards automation as provided by artificial intelligence and not provided by companies like UiPath or provided by companies like OpenAI and ChatGPT instead of companies like UiPath. So the company reported second quarter ARR, which stands for annual recurring revenue, increased by 11% to 1.723 billion, driven by 31 million in net new annual recurring revenue. Annual recurring revenue, or the latest annual recurring revenue, is basically their monthly total revenue in their most recently reported month. And the management team reported a $31 million increase in this figure, but they also highlighted in their forecast for this upcoming quarter that this number will accelerate. Instead of increasing by just 31 million as it did in the first quarter, or as it did in the second quarter, for the third quarter of fiscal 26, they're forecasting an increase of roughly 50 million. So this number, it was a solid increase in the second quarter, but the management team is also forecasting that increase will accelerate in the upcoming quarter. And that had a lot of investors excited about UiPath stock, and the price action caught some momentum on the back of that announcement. And by the way, this document I'm reading from is UiPath's Q2 2026 earnings call with Wall Street Analyst. I've made this highlighted document available for my channel members, and you can join my channel for less than $5 a month. See the link in the description so you can see all the benefits you get for a channel membership. Now, I updated my discounted cash flow valuation for UiPath stock, and the intrinsic value per share increased to $18.34. The current market price at $11.58 is significantly undervalued based on what I calculated as a fair value for this stock. So I've had UiPath stock rated as a buy all year long, and after evaluating the company's latest performance, I updated that recommendation, and today I updated that recommendation again, letting everyone know that I think this business, even though it faces significant challenges and significant risks, artificial intelligence is a two-sided risk for UiPath. Some investors only believe it's a downside risk where the business could lose market share to more AI-focused enterprises. But I think it's a two-sided risk where UiPath can harness and enhance its services that it provides its clients using artificial intelligence to help its offering and offer a better customer value proposition. So it could go both ways. Certainly, the risks of this business have increased since late 2022 and the time since then with the increasing effectiveness of artificial intelligence. But I think the valuation makes it a good risk versus reward for long-term investors. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.